Hello and welcome to the Estate Planning Toolbox. Thanks for taking some time out of your day to check out everything we have going on here. My name is John Connor and I am an attorney in the Trust and Estates Group of Graves Doherty here in Ann Moody, a law firm located in downtown Austin, Texas. This podcast is a client-focused podcast covering various estate planning topics, including wills and trusts, powers of attorney, corporate entities such as LLCs and limited partnerships, probate administration, and everything in between. Thanks very much for stopping by. Hello everyone and welcome back to the Estate Planning Toolbox. Today will be another entry in our Estate Planning Necessities series, and we will be discussing beneficiary designations, those designations that you have in place on things like life insurance policies and retirement accounts. But of course, before we jump into that, it is time for everyone's favorite part of the podcast, and that is the movie quote of the day. And today's movie quote of the day is, "Say hello to my little friend." It's a fairly famous quote, one of the more famous quotes we've had on the Estate Planning Toolbox. And of course, you know the drill. If you want to know exactly what movie that is from, then please stick around until the end of the podcast. So jumping into today's material and discussing beneficiary designations, the reason I want to go through this and the reason I'm including this as part of the estate planning necessities is because it really is a crucial part of your estate plan, and it can be very easy to overlook. Very often someone will say, well, I have my will, I have my trust, I have my powers of attorney, that's all I really need. And that may not be the case. If you have things like life insurance policies and retirement accounts, you're going to want to make sure that your beneficiary designations are in place and or up to date. As I've kind of been mentioning, these beneficiary designations will apply to things like retirement accounts and life insurance policies, and that is going to be the focus of our podcast today. But you can also apply beneficiary type designations to things like brokerage accounts and or bank accounts, usually through some kind of a transfer on death or payable on death designation. But again, today's focus is going to be on retirement accounts and life insurance policies. One thing to keep in mind as we go through all of this is that the beneficiary designations will not have any effect on whether or not these assets, these retirement accounts, or these life insurance policies are going to be included in your estate for estate tax purposes. But as we've talked about before, a beneficiary designation may result in an asset being a non-probate asset, meaning that it would not pass as a part of your will, it would not be part of your probate estate. But jumping in now, let's start off by talking about the benefits of a proper beneficiary designation. In terms of life insurance is very often an important part of someone's estate plan. It might be a way that they are making a large gift to a beneficiary, or it could be a way that they are making funds available to their estate for purposes of helping to pay for certain estate expenses. What a proper beneficiary designation is going to do in terms of life insurance is ensure that the proceeds of that life insurance policy, that death benefit, passes as you intend it to, meaning if you want it to go to a certain individual or to a certain charity or to be made available to your estate so that it will be available to help pay certain estate expenses, that beneficiary designation will ensure that happens. And without it, you'll simply have to refer to the life insurance contract to determine where that actually passes, and it may not be where you intended it to. In terms of retirement accounts can very often make up a majority of someone's estate. Very often, it's also the vast majority of someone's estate. It may be their single biggest asset. Beneficiary designations are crucial to retirement accounts because they can help your beneficiaries achieve the best income tax result possible. What a proper beneficiary designation will do in terms of a retirement account is it will allow that beneficiary to be able to stretch out any required minimum distributions they might be able to take, as opposed to taking them out over some small period of time or even over a lump sum payment. And the reason that's advantageous is because distributions from retirement accounts are going to be income taxable. And so if we are able to stretch out the period of time for making the payments, we can limit that income tax hit to the beneficiaries. Generally speaking, if you're able to name your spouse as a beneficiary, that will achieve the best income tax result because the spouse will be able to roll those assets into their own retirement accounts and stretch the required distributions over their own life, as opposed to the life of the original account holder or even over some shorter period if there is no beneficiary designation. Still, if you don't have a spouse, naming a non-spouse beneficiary is still going to be far preferable than not naming a beneficiary at all. If an account owner names a beneficiary and then dies before attaining age 70 and a half, the required minimum distributions for that named beneficiary will be based on the IRS table that takes into account the beneficiary's life expectancy, which could very well be a much longer life expectancy than the original account owner. If the account owner dies after age 70 and a half, having named a beneficiary, then the required minimum distributions will be based on the IRS table that takes into account the longer of the beneficiary's life or the original account owner's life. So therefore, they can still achieve the best income tax result possible, whether that be on the account owner's life or the beneficiary's life. Now, let's talk about some of the consequences of inadequate or non-existent beneficiary designations. In terms of life insurance proceeds, if you don't name a beneficiary, there's no real tax disadvantage, but the proceeds of your life insurance policy may not pass as you intend them to. They may not go to the right beneficiary. They could just simply go to your estate. So again, having the beneficiary designations in place will help to make sure that these life insurance proceeds pass the way you intend them to. Also, failing to name a beneficiary can create more work for your executor and can complicate things for a little bit in terms of if they need to get those proceeds into the estate, if they need to be included on the inventory. So certainly making sure that your beneficiary designations are going to help keep things as simple and straightforward as possible for everyone involved in administering your estate. Now, for retirement accounts, there can be very negative income tax consequences associated with not having a proper beneficiary designation in place for your retirement accounts. And the main reason for that is the beneficiary, which will likely be determined under the contract that you sign when you open the retirement account, will no longer be able to stretch the required minimum distributions that they will be required to take from the retirement account. Additionally, if you do not name a beneficiary designation and then die before attaining age 70 and a half, then whoever is determined to be the beneficiary will be required to withdraw all of the account within 5 years of the account owner's death. And as we talked about, the distributions from retirement accounts may very well be income taxable to those beneficiaries, which means now that you've subjected the beneficiaries and the life insurance proceeds to an accelerated income tax result by having to withdraw all of the assets in the account within the 5 years of the account owner's death. Even if the account owner dies after age 70 and a half, the distributions are still going to be based only on the account owner's life expectancy. The life expectancy of the beneficiary will not be taken into account, and as we discussed, it's very possible that the beneficiary's life expectancy might be longer than the life expectancy of the account owner, meaning they're missing out on being able to stretch out the distributions over their life as opposed to having to take distributions over the life of the account owner. So kind of in summary, I hope I was able to stress enough that making sure your beneficiary designations are in place are a very important part of your estate plan. It will ensure that your benefits pass to your intended beneficiaries, and it will help your beneficiaries to achieve the best tax result possible, really the best income tax result possible. So you will want to make sure those beneficiary designations are in place, and you should review them every 3 to 5 years. Really, if you're reviewing your estate planning documents, you should review your beneficiary designations as well. So that does it for today's podcast, but before we go, here is the answer to the movie quote of the day, and it is from the movie Scarface. Say hello to my little friend! As always, here's my contact information. If you have any questions or if there are any topics you would like to see discussed on the Estate Planning Toolbox, please do not hesitate to contact me. And of course, thank you all very much for stopping by, and check back in soon for our next podcast.